Hey there, fellow investors. Iggy here from Investing Iguana. We're diving deep into Mapletree Logistics Trust's 2024 annual report. Ever wonder how some companies seem to thrive even when the market's acting like a roller coaster? Well, that's exactly what we're going to unpack today. In this video, I'll break down MLT's performance by doing a deep dive in their 7 key slides from their latest financial report presentation. We'll look at their revenue, their smart property moves, and how they're spreading their bets across Asia. Trust me, by the end of this video, you'll be dropping MLT facts at your next dinner party like a pro. Slide 1. First up, the trust's doing pretty steady. Their revenue is holding strong at 181.7 million Singapore dollars, just a tiny dip of 0.3% from last year. But here's where it gets interesting: their portfolio occupancy is sitting pretty at 95.7%. That's like having almost every seat filled in a packed stadium. Plus, they've bumped up their average rental by 2.6%. It's like they've found a way to charge a bit more for those comfy seats. Now, let's talk about their shopping spree. Mapletree's been busy grabbing new properties in Malaysia and Vietnam. They're not just buying any old buildings though, we're talking modern, grade A assets. It's like upgrading from a flip phone to the latest smartphone. But they're not just buying, they're also selling. They've got plans to offload some properties in Singapore and China, and they've already sold off a warehouse in Malaysia. It's like they're playing Monopoly, but with real buildings. Slide 2. Next, let's look at the big picture. Mapletree's gross revenue took a tiny dip of 0.3% compared to last year. Now, that might not sound like much, but in the world of big business, every decimal point counts. The main culprits? China's not bringing in as much dough. They sold off some properties, and the yen and yuan are playing hard to get. But don't worry, it's not all doom and gloom. Singapore and Hong Kong are picking up the slack, and some new acquisitions are helping to balance things out. Now, let's talk about the money in your pocket, or in this case, the unit holders' pockets. The amount that Mapletree can share with investors, that's the amount distributable for you finance newbies, dropped by 7%. That's like your allowance getting cut because your parents had to spend more on house repairs. Speaking of repairs, Mapletree's property expenses went up by 3.9%. They've got more buildings to take care of, and those utility bills aren't getting any cheaper. But here's where it gets interesting. If we pretend the currency exchange rates didn't change, Mapletree's revenue would have actually grown by 2.1%. It's like when you think you've lost weight, but it turns out your scale was just off. Bottom line, Mapletree's facing some challenges, but they're not sitting duck. They're making moves, buying new properties, and trying to keep their ship steady in choppy waters. Slide 3. Mapletree's balance sheet is looking pretty solid. Their total assets are sitting at a cool $14,047 million, which is more than double their total liabilities of $6,551 million. That's like having a piggy bank twice as big as your IOUs, always a good sign. Now, you might notice their net debt went up by $179 million. But don't worry, it's not because they went on a shopping spree. They're actually using this money to expand their business in Malaysia and Vietnam. It's like planting more money trees to grow their forest, if you catch my drift. Here's where it gets interesting. Their aggregate leverage ratio is at 39.6%. Think of this like the amount of weight your backpack can carry before you start feeling the strain. At this level, Mapletree's still comfortably carrying their debt load. Plus, they're borrowing at a sweet 2.7% interest rate. That's like getting a discount on their loans. With a stable BBB plus credit rating from Fitch, it's clear that Mapletree Logistics is managing their finances like a pro. They're growing smart, not just fast, and that's the kind of company that could make your investment portfolio purr with contentment. Slide 4. Looking at this slide, this debt maturity profile is looking pretty sweet. Mapletree's got their ducks in a row with a well-staggered plan. Think of it like spacing out your bills throughout the month instead of getting hit all at once. Smart move, right? Now, here's the kickers. They've got a whopping 956 million Singapore dollars in credit just sitting there, ready to go. That's like having a massive emergency fund for your business. And they'll need about 197 million Singapore dollars of that to cover what's due next year. It's only 3% of their total debt, which is pretty chill. It's like having to pay just the minimum on your credit card when you've got a fat savings account. But here's where it gets interesting. Check out that pie chart. Their debt is spread across different currencies like it's a global potluck. The biggest slice? Japanese yen at 28%. That's a bold move, and it could be a double-edged sword depending on how exchange rates swing. Overall, Mapletree's playing it smart. They're not putting all their eggs in one basket, and they've got plenty of cash to cover their near-term debts. It's like they've built a financial fortress, solid foundation, multiple escape routes, and a well-stocked pantry. Slide 5. Looking at their pie charts, it's clear MLT isn't putting all its eggs in one basket. They've got their assets and revenue spread out across different countries, which is super smart. It's like having a buffet of investments instead of betting it all on one dish. Singapore's the big player here, making up about 19% of their assets and a whopping 27% of their revenue. But check this out, Hong Kong and China are also bringing some serious weight to the table. Now, why is this cool? Well, it's all about stability, folks. When you spread your investments across different places, you're less likely to get knocked down if one market takes a hit. It's like wearing a helmet while riding a bike. You hope you won't need it, but you're glad it's there if you do. This strategy has helped MLT stay strong even when things get rough in the market. And with about 70% of their portfolio in developed markets, they're playing it pretty safe while still keeping things interesting with some growth potential in places like Vietnam and India. Slide 6. Next, let's talk about their lease expiry profile. It's like a well-planned party schedule, folks. They've got a nice spread over the next few years, with the biggest chunks in FY24/25 and FY25/26. This is good news because it means they're not putting all their eggs in one basket. If one year goes sour, they've got other years to fall back on. Plus, that 2.9-year weighted average lease expiry? It's like having a comfy cushion to sit on. Now, let's zoom in on their tenant base. It's as diverse as Singapore's food scene. They've got 943 tenants, mostly in consumer-related sectors. That's like having a buffet of different income streams. Their top 10 tenants make up about 22.1% of their total gross revenue. It's a healthy mix. You've got big names like CWT, Equinix, and Coles Group leading the pack. And check this out, they've got tenants from all over the world. It's like a mini United Nations of logistics. What does all this mean for you, my fellow investors? Well, it's like having a well-balanced investment portfolio. Mapletree Logistics Trust has spread out its risks nicely. They're not too dependent on any one tenant or any single year for their income. That's the kind of stability that can help you sleep better at night when you're holding this stock. Remember, iguanas, a diverse tenant base and a well-staggered lease expiry profile are like the secret sauce in a Reits' recipe for success. It helps them weather storms and keep that cash flowing. So, keep your eyes peeled for these factors when you're sizing up your next Reits investment. Slide 7. Looking at this slide, MLT's got a whopping 13.4 billion Singapore dollars in assets under management. That's like having $13,400 million condos. Their occupancy rate is sky-high at 95.7%, which means their properties are hotter than a Singapore hawker center at lunchtime. Now, let's talk geography. MLT's spreading its wings across Asia-Pacific like a smart investor, diversifying their portfolio. They've got 48 properties in Singapore, which is their home base. But check this out, they're also big in China with 43 properties. It's like they're playing real-life Monopoly across the region. What's really interesting is their expansion into emerging markets. They've got 12 properties in Vietnam and even 3 in India. It's like they're planting seeds for future growth. Smart move, MLT. So, what does this all mean for you, my fellow investors? Well, MLT's looking like a solid player in the logistics real estate game. With their high occupancy rate and smart geographical spread, they're set up to ride the e-commerce wave that's sweeping across Asia. It's like catching a perfect wave at Sentosa. If you time it right, you could be in for a sweet ride. And there you have it, folks. Mapletree Logistics Trust's 2024 annual report in a nutshell. Pretty impressive stuff, right? We've seen how MLT's keeping their ship steady in choppy waters. They're not just surviving, they're thriving. From their smart property picks to their global spread, MLT's showing us how it's done. Now, I know we've covered a lot. But here's the thing, understanding these reports is key to making smart investment choices. It's like having a roadmap in the wild world of stocks. If you found this breakdown helpful, do me a favor. Smash that like button. It helps more people find this video and join our investing community. And hey, if you want more juicy insights like this, hit that subscribe button and ring the bell. You'll be the first to know when I drop new videos. Got questions? Drop them in the comments below. I love hearing from you guys and sparking discussions. Remember, investing is a journey, and we're all in this together. So, until next time, this is Iggy from Investing Iguana, signing off. Stay curious, stay informed, and keep growing that wealth.